Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Minera Alamos, Inc. Before I introduce our speaker, please note to submit your questions in the question box to the left of the slides. And as a reminder, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Doug Ramshaw, President of Minera Alamos, Inc., which trades on the OTCQX Best Market under the symbol MAIFF and on the TSXV under the symbol MAI. Welcome, Doug.
Thanks, Matt. I also feel like I'm Jerome Powell's warm-up man today, so we'll get this presentation out the way and then everyone can sit down and see what the Fed are going to do. Good to be back. Happy to present the Minera Alamos story to new people and old shareholders alike. Minera is a gold mining and gold developing company focusing on building low capital intensity mines. And we've been always focusing on that, but I think it's even more important now given the inflationary pressures out there in the system. I will be making a few forward-looking statements today. Our expertise is heap leach mining, which does lend itself to low capital intensity. To put in perspective, our first mine cost just $10 million to build. The next planned mine will be sub $30 million. And we have a third one waiting in the wings that's probably in that $30 million range as well. And that has meant that we've been very insulated from inflationary pressures that have seen major capex overruns and cost overruns at a lot of projects. Cerro de Oro, which I'll get onto later, we can build 6 of those just for the cost overruns of some larger mines. And so I think that insulation has helped in terms of our cash management. We have a strong balance sheet. We're debt free. We have 0 warrants. And we got the first mine up and running, built during the middle of the pandemic. It's been going through a slower ramp up than we would have liked, but we met our commercial production thresholds last year, as indicated by our year-end financials we put out just on Monday. But our business model is not about the first mine, it's about realistically being able to build a sequence of mines. So we are kind of a quasi gold developer with gold production as well. And that gold production helps obviously fund what we're doing as a company. We'd much rather fund out of cash flow than constantly diluting shareholders. As management team that has a big stake in the company, we view dilution as diluting ourselves as much as you, the shareholder. And so that kind of alignment, I think, has led to prudent cash management and at times making tough decisions to ensure that the balance sheet is strong rather than getting too aggressive and blowing a hole in a balance sheet that comes with pain in the equity markets. So we have a multi-mine strategy. We like Mexico. Mexico's been in the news a lot lately. There's some good things and bad things that have been talked about out of Mexico. But I actually think a lot of the mining reform that they're talking about is actually creates a positive environment in terms of the relationship you have with your local community and stakeholders, with state governments, with the federal government. When you're building mines in another country, it should be a complementary relationship. And I think a lot of what has been discussed in the news of late with mining reform can actually be viewed positively in terms of good actors doing good work in countries should not be punitively punished for that. And I think bad actors in any industry probably should. I'd like to think we fall in the former group. So our goal is to build this sequence of mines, Santana, which is built, followed by Cerro de Oro. We hope to start building at the beginning of next year upon receipt of permits. Santana can go through a series of expansions that we will fund out of future cash flow. And we're sitting with a third asset that's actually already permitted, La Fortuna, that we think can grow bigger before we actually build it. We want to build it the right way. And so it's another project where we can reinvest cash flow to to expand the resource and build a bigger mine when we decide to pull the trigger on that. We're still looking for other assets that can fill the pipeline as these mines are brought on. And I think there are opportunities that abound, actually, because there's a real shortage of teams like ours that actually want to build mines. So there's really great work done by exploration companies where, the path for what their asset's going to become is not necessarily them building it themselves. And that's where an operating group like ours that build mines, because that's where our passion is, I think could take advantage of great work done by exploration teams elsewhere and build and build out their assets in due course. So that's our kind of our business model. It's certainly, I've had this slide for many a year, and it certainly got slowed down because of the pandemic. But I think we're now set nicely on the kind of rear end of the last few years to grow. And whilst I think in many ways we've been in the operating doghouse for the last little while, I'm confident in the execution of our operating team. It's one of the reasons I've bought as much stock as I have in the company over the last year and a half is not just because of a business model that makes sense. It's because I think we have the team to execute on that business model, and I'm very much aligned with our shareholders in that regard, and will continue to align my interests with our shareholders. It makes sure that we share in the benefits collectively. So our team, as I mentioned, our board of directors is a very technical team. I think that's what you want to see in a mine building group. So geologists, engineers, metallurgists, and then the operating team, largely been together for 13, 14 years. We've added people where needed. Probably the most recent addition a little while back was Chris Sharp, who joined us from Centerra, that takes some of the workload pressure off our CEO. And as the company grows, we'll continue to build out the operating team. But we're largely Mexican nationals. Even our CEO, who spends most of his working time in Mexico, is a permanent resident down there. So it's a team that's on the ground, and being on the ground allows us to see opportunities as well with our relationships that maybe are lost on some groups. So I proudly work with this group. They're an unbelievable team, and really the driving force of the company, not me. So I mentioned we're debt free. We have roughly 18 million of working capital, 13 million in cash. So we're well funded. Analyst coverage out of 4 firms, and a shareholder base which is, at least 50% retail. I think as we develop, especially our second mine at Cerro de Oro, we can make this a more institutional story. But we do have solid institutional support from long-term generalist investors like the Donald Smith Value Fund, Aegis Financial, and I love operating with shareholders that are generalists, because they tend to have the right timeline. They're looking out 3 to 5 years, and building a company takes time, but the rewards are out there, and so very happy with our shareholder register. We'll continue to try to eat into that retail wedge over time with larger institutional investors, and I think we have a story that will attract them as we execute on Cerro de Oro in particular. Santana, that's what a $10 million mine looks like. It's basically, we're building pads, ponds, a carbon plant. We're not producing gold at site. We're shipping a loaded carbon concentrate actually into the US, where the gold is stripped and ultimately refined in the US. And that allows for a very cheap build, because it's earthworks, it's pads, it's ponds, it's that plant. These costs at Santana came in line with our budgets, even despite the pandemic, and in many ways informed the costs that we put out in the PEA for our second mine, Cerro de Oro. That no one questioned those costs with a 28 million capex, because we've just done that at Santana. So It's small, it's modular. Right now, we've got a pad there that we're going to be expanding this year that will triple the pad capacity. And a project like this goes through a sequence of these kinds of pad expansions. Cerro de Oro will be different. We're permitting enough pad space out the gate for twice what was presented in the PEA, because we know Cerro de Oro can get a lot bigger. And as a result, we want to make sure that we've got that bigger plan permitted for from the outset. Santana is a little bit more of a classic bootstrapped operation. It's produced about 13,000 ounces since operations started. We got another 7,000 ounces of recoverable inventory on the pad. We got the project up to about a 20,000 ounce a year annualized run rate in Q3 of last year. And in that quarter, it spat out $3 million of free cash flow. So it shows for a $10 million mine, it can produce some very significant cash generation. One thing we faced on top of the pandemic was a significant drought in northern Mexico. It's the same one we've been seeing headlines for in California, Southern California. And it did mean that things got tricky at times with water. And so we made a decision in Q4 ahead and into Q1 ahead of what seems to be a subsiding of that drought and a move from warmer, drier La Nina type weather to a wetter El Nino type weather. We decided to scale back production in Q4 and Q1 before looking to ramp it up more Q2 and onwards this year. And so I think we probably saw the low point on our quarterly production in Q1. And we're expecting to, rather like we did last year through the first 3 quarters, scale up and hopefully get more back up to that kind of at least 5,000 ounce plus kind of range, which we know spits off significant cash. Cash that we've reinvested in the company's growth last year, and cash that we've generated ourselves. We rarely go to the equity market. We did a modest equity raise last year of $4.5 million, and that was me putting in $500,000 and another fund, long-term supportive fund, putting in the rest, just the two of us. That was the first time we'd gone to the public markets in 2 and a bit years, because we've got a business model that should be self-sufficient, and that's the goal. So Santana is still growing, and we're going to try with exploration that we're doing right now, show why it can grow much more considerably than where it's at right now. And that will also help us plan for the future. What's interesting is our cash costs are very competitive. We don't really have a lot of sustaining capital, so we ran at just under $1,200 Canadian, so a little under $1,000 US. In direct mining cash costs in 2022. So these are high margin ounces. So sometimes production rates don't seem particularly meaningful, but the actual margin on those ounces is very meaningful. And I think as we can scale up production, will be more so. And the exploration, I said, Santana is built around 2 starter pits, but there's a whole bunch of targets. Some are brand new, never been drilled. They're all similar gold bearing breccia pipes. The one I'm particularly keen to get our drill rigs moved over to very shortly is Zada. It's a brand new, never drilled pipe that could be very significant for our long-term planning at Santana. But we've always had good results that have come out of this project. It's a fertile zone. I'm excited that we've moved back to discovery drilling that we put on hold while we focused on the mine development during the pandemic. But I love drilling. I just hate the cost of it. So if we can fund that from our own resources, that's great. And I'm glad we've got back to demonstrating the exploration upside at the Santana project. But I think the game-changing asset for Minera and the future of the company, for a lot of reasons, is Cerro de Oro. I think we're planning to build a mine in one of the better parts of Mexico that you could want to build a big open pit heap leach like we plan here. And this is a meaningful mine. It's a conventional project. It's not bootstrapped. It comes out the gate at considerable production profiles. We came out with a PEA in October last year. With a starting mine life of about 8 years at 60,000 ounces a year, sub 900 all-in sustaining costs. So really high margin ounces, whether we're in a $1,600 gold environment or a $2,000 gold environment. Our projects were built to withstand the cyclical nature of gold, and certainly to take advantage of rising gold prices should we be fortunate enough to have them. We took a long time preparing for this permit application, and the reason we did was we wanted to ensure that we had all the permit in place for a much bigger operation. We think Cerro de Oro can be twice the size that was presented in that PEA in due course, and we just wanted to make sure that that we had a permit application that was prepared for the future, not just for that 8 years in the PEA. And those are the highlights of the PEA: the 60 to 70,000 ounces a year in the first 4 years, coupled with where we think Santana can gets us real close to that kind of 100,000 ounce a year mark, which we think is meaningful in terms of leaving a kind of a junior producer status behind us. Very low AISC in the first 4 years. And part of this is a low-grade deposit. It's running at around 0.37 grams per ton, but it has remarkably low strip. Life of mine strip ratio at this project is 0.3 to 1. So you're moving 3 tons of ore for 1 ton of waste. In the first year, it's a close to 0.1 to 1 strip ratio. It's virtually everything. I always joke that heap leach is a big, giant earth-moving exercise. Well, 9 out of every 10 tons of earth we move in year 1 goes to the heap leach pad. Has remarkable economics. I can't control the permitting timelines. We're hoping around year end we should have our permits back. The one thing I can control is how we're going to build it and how we're going to fund that building. And so I've said that my goal is by middle of the year to have a lending package in place. We're debt free right now, and that always allowed us to take debt on to build project number 2. That was always the intention. It has been since before we had Cerro de Oro and we were going to build Fortuna next. And so the goal is to send the message to our shareholders and to the market at large that with a lending package in place, there's not some scary news coming where we announce permits at the end of the year and a week later we announce some big dilutive equity raise to fund it. The funding package will be well informed by the market well in advance. And I think it's the strength of the company that our CapEx builds are so modest that we can actually take potentially slightly higher cost of capital debt that has less hooks and covenants attached to it and more flexibility as a result, because a 1-year payback on a $25 million lending package, 3 or 4% difference in interest rates is a very modest amount of extra interest you're paying on it, and I think it's a lost part of our business model that if you're building something that's got a $200 million capex, you obviously want the lowest cost of capital. We still want the best capital we can take, but I've been very encouraged with what we've discussed with lenders right now, and I hope to have news on that by the middle of the year. As I mentioned, exceptional economics. This was run at $1,600 gold. I think at $1,250 gold, it still has a 41% after-tax IRR. So it's very a very counter-cyclical kind of project that can work in the worst of times and obviously prosper in the best of times. And if we are believers that gold can go up, I think growth gold stories like we can be are certainly the kind of company that can attract capital. And that was the resource I mentioned earlier, just under 800,000 ounces at 0.37. And we think that this project can ultimately be, close to double this. And that's why we've permitted for something that can be probably double this size. Third project waiting in the wings, La Fortuna, already permitted. And I'll jump maybe quickly to the PEA, because we put this PEA out in 2018. The reality is that pre-production capital is probably $35 million now, still modest. The issue with this project is definitely not the economics. We ran this at $1,250 gold. It had a 93% after-tax IRR back then. Had sub 500 all-in sustaining costs, and it's partly because this is a very high-grade open pit, 3 to 4 gram open pit, 6-to-1 strip. If it has one issue, it's the fact that it's got a short mine life, and that's because, I'll just jump back, we just based this starter pit that informed that PEA around a high-grade starter pit. We know that there are extensions to it. We also know there's a lot of greenfields exploration upside. So one of the reasons it's sat is really it needs to be grown. No one likes a 5-year life, however good the economics of that 5 years are. So our feeling is we'd want to grow it out to a 7 to 8 year mine life, and then conceivably still further, because we own a 2,000 ton a day mill, and that's why I think the CapEx numbers are not going to move up dramatically from what we did in 2018, because we already own the mill. A 2,000 ton a day mill, the PEA calls for 1,100 ton a day throughput. So there's a lot of mill capacity there. This project scales at 50,000 ounces a year using 1,100 ton a day throughput. So a lot of our thought is, can we both increase the mine life, but also increase what we're putting through that mill, so that maybe we're turning this project on with longer mine life and a higher production profile. And we think that this is a great project to deploy capital in, that we cash flow from our other operations. And so that's why it's sat there, but it's fully, we've got the full federal permits for this project. So it's a nice project to have waiting in the wings. And I think it actually speaks to the quality of and excitement we have for Cerro de Oro, that La Fortuna is kind of, the Rodney Dangerfield of our assets. It gets no respect. It constantly we are always finding something that seems to get developed ahead of it. But it's an absolutely fantastic project to have sitting on the sidelines. And when I mentioned the greenfields exploration upside, the project is that little red star right in the middle of that kind of claim map. That's where the 300,000 ounces of high grade is. There are extensions to that pit, but we've got a very large land package that really hasn't seen any exploration done on it since in this area since 2008-9, when our team back in the day owned this project. We bought it back from a company that had acquired a former producer that Darren and the team ran called Castle Gold. So we've had drill programs mapped out for this program for years, and it will be exciting when we have the cash flow to go in there with drill bits and show the regional potential as well as the near mine site potential. This year, though, a lot of news. It's going to be Cerro de Oro. It's going to be ongoing proof that Santana can continue to work and continue to scale up, and a lot of permitting and drill news at Cerro de Oro and Santana. So I think I've thought in previous years we'd have more news flow. I think this is the year where we can reward the patience and loyalty of our shareholders with a lot more news. It's something that I very much want to do. And I know time is getting close. So just one other thing, we have a lost asset in. We don't really talk about. We started talking about it this year. We think that we can take our low capital intensity approach to mine building to the copper space. And we own a copper asset called Los Verdes, just north of Santana. This was a project that had a PFS done on it in 2008, a PEA done on it in 2012. We're looking at scaling that PEA back to a small, low capex project. Maybe it's about a 25 million, capex kind of number. 6-year mine life at $4 copper. I think it spits off on our numbers internally, at least. 35 million in pre-tax cash flow a year. But more importantly, show that we can do what we've done in gold in copper. And so we're already looking for assets that could sit behind Los Verdes and show a path where we can create either Minera Copper within and keep that cash flow within the gold business, or at some future point spin out that stake to our shareholders. But excited to show what we can do on the copper side. So stay tuned on that. That's it's more of a concrete plan now of what we're doing. It's been a concept on a whiteboard for the last year, but we're looking to make some moves in the copper space. And with that, that's the end of my presentation, but I appreciate some of the questions that have come in. So I'll try to get through them as quickly as possible. On the water issue, the best thing I can say on the water issue is, we do see relief in sight. We wouldn't be planning a tripling of pad capacity if we thought that there was a long-term water issue there. We've already done at Cerro de Oro our first round of hydrological drilling, big aquifers there, very comfortable with the water situation that we'll be experiencing in Zacatecas. On the copper side, someone asked on the spin out is still an option, any financing planned? Well, if we do anything on the copper on the financing side, it won't be dilutive to the Minera Gold side of the business. I think I addressed that. We either want to maintain that cash flow within, or a portion of that cash flow within Minera, or we'll look to spin it out for the benefit of our shareholders. I think I actually addressed the question on CDO, on construction costs, and we're trying. Well, the question here is, will there be an equity component required by potential debt provider or offtake? No, I'm actually looking to do, to the tune of 25 million US. That's zero equity. So that's the goal. That is what we're currently talking to with lenders, and there doesn't seem to be an objection to not having some zero equity alongside their debt. We don't think that the mining laws are going to have a huge impact. There is a lot of noise right now out there. There are definitely going to be questions, and I think political, legal challenges down there because of the lack of debate and consultation. It was good to see some of the original things watered down and what is going to the executive now for signing into law. But I think I would not be surprised to see, legal challenges by other political parties. We're watching it closely. Every country has its issues, and you have to weigh up what are the benefits. And in Mexico, there's tremendous geology and mineral potential. There are well-trained Mexican nationals. I know because all our people that will be working at CDO will be Mexican nationals that understand mining. The permitting timelines are still way quicker than in places like Canada and the US. And sometimes that comes with certain things on the negative column, but overall we're very comfortable with operating in Mexico. Our team's been down there for 15 years, and they'll probably be down there for another 10 to 15 years working together. I think from a capital position to support 2023 and 2024, well, we've got a strong balance sheet right now. And I think I've addressed, our capital needs for Cerro de Oro and hopefully we'll present it to the market for their digesting, a debt solution for Cerro de Oro, because I want shareholders and future shareholders, or just spectators, to understand that there is a clear path for how Cerro de Oro is going to get built. That's the one thing I can control. We're still very confident in our permitting timelines for Cerro de Oro, that we hope around year end we're in a position to draw down a funding package that will be contingent upon receipt of those permits, but at least will show a clear path as to how we're going to fund Cerro de Oro. So I appreciate some great questions today, and I appreciate everyone who has attended, and hopefully this was useful. If you want to get hold of me at any time, at the bottom of every press release is not just some number that you call and hope that it's my cell phone number. I love getting calls. If I'm on another one, leave a message. I'll get back to you. And my email address is there too. So if I haven't addressed everything today, please hit me up.